I come on, I present a topic, kind of talk around that topic a little bit, and then in the middle of the show somewhere, there is a question of the day. The question of the day comes from you all, from all of the listeners. So send me your questions, 800 credit score man at gmail.com. Send me your questions, 800 credit score man at gmail.com. I will most likely answer you directly. So I'll answer you directly in email, and then you may be the question of the day on the show as well. So the question of the day is sponsored by Cute as a Cupcake, the cupcakery and bake shop where the cupcakes are more than just cute, they're delicious. It's located at 2008 West 81st in Maryville, Indiana. Again, that's Cute as a Cupcake, 2008 West 81st in Maryville, Indiana. When you get by Cute as a Cupcake, you let them know that the 800 credit score man sent you. Okay, so let's get to our question of the day for today. The question of the day comes from Anthony out of South Carolina. So Anthony asks, what's a beacon score? And this is a great question because actually I forgot all about beacon scores. I hadn't thought about them in some time. On this show, I talk about credit scores just overall, since there are some different ones out there, but typically I just use the word credit score because I don't want to confuse anyone, and it can be confusing. So that's a great question. What's a beacon score? So years and years ago, your credit score was sometimes referred to as your beacon score. This was used by Equifax. So let's say you went into a car dealership and you sat down, you picked your car, and they ran your credit report. If this particular car dealership used Equifax, they may come back and tell you that, your beacon score is X. So let's say your beacon score is 730. So your beacon score is like your FICO score. It's also like your Vantage score. If you listen to the previous shows just a few weeks ago, I talked about FICO versus Vantage score and the changes that are coming about. And so FICO is really the big player in the game of credit and credit scoring. They're the really big player. Vantage score is trying to get on their level, and they're just not there yet. But Equifax used the word beacon. So if you go to a lending institution, if it's a personal loan place, and you go there and they pull Equifax, they may refer to it as your beacon score. It runs just like FICO and Vantage from 300 to 850, and of course, the higher, the better. But it's basically the same thing. Basically, you all know, if you've been pulling and checking your credit reports and your credit scores, that your credit scores can vary widely. So sometimes you'll get a 680 on one and the other one will say 683. So those are really, really close. But then your third one, it'll come back and say you have a 720. So that's that's a big difference in there when it comes to your credit scores. So Beacon basically is the same thing as your FICO score or your Vantage score, even though that number may be a little different. But now you know, if somebody says Beacon to you, they're pulling your Equifax. Now, if you've been checking your credit report, and I don't care where you're checking it at, if you've been checking your credit report and you're getting your score, then you know that that's Equifax. And then you should know what your Experian credit score is and what your TransUnion credit score is. So you would know which one is higher for you. So if you go into a dealership and you say, hey, which one are you using? Are you using Equifax or whatever? Then you'll know what your chances are and which one is better, which one's higher for you. Your chances of getting approved for that particular loan, for that car, or whatever it is. Okay, so I just wanted to make sure that all of you knew that a Beacon score is basically the same thing as your FICO score, as your Vantage score as well, and that's not something that you need to really, really concern yourself about when it comes to it. Doesn't matter what they call it. The score should be relatively close to the same. All right. So thank you very much, Anthony. I appreciate you contacting me with that question. I hope this answers it for you and that it is clear. And Anthony, you are now officially a part of the 800 Credit Score Man show. Family, thank you very much and welcome to the family. Again, you guys, if you have questions, I don't care how long your question is, how short your question is. If you think that it's not a smart question, doesn't matter at all. Send your questions to me at 800 creditscoreman at gmail.com. creditscore.com. You can also, of course, contact me on Twitter. On Twitter, I'm at creditscore_man on Twitter. On Instagram and Facebook, you can catch me at 800 Credit Score Man on both of those. And I'm going to encourage each and every one of you to join the Facebook group Credit Score Comeback. Join that Facebook group Credit Score Comeback as well. They get all of the information that I provide to you guys first and foremost. So anything that I'm bringing to you, if I have the opportunity to present it anywhere first, I present it there first. So join that group as well. All right, so let's jump back into some of the opportunities that you might have when it comes to things that impact your credit score. All right, so we talked about inquiries already, collections, late payments. What else we talk about? Settlements. So we talked about all those things, about liens and judgments as well. So let's talk about this one subject, and I just mentioned it a few shows ago, about no credit. So having no credit at all is a negative for you. So if you are 18 and you're just starting out, you graduated high school this year. Actually, shout out to all the high school graduates, the graduates, the college graduates as well, people getting their PhDs and their masters, graduating from law school and medical school. Shout out to all of you guys. Congratulations as well. So if you have no credit at all, you're 18, you're starting out, and you have any credit, don't have any credit, that's a negative. Because your credit is based off your payment history for the most part, or that's the biggest factor for you. And if you don't have a payment history at all, then your score is going to be low. So having no credit at all is an issue. Last week or a couple of weeks ago, I talked about people that have no credit. They think that that's good for them because they don't owe anybody, but that's not good for your credit score. You need to have some credit. You need to have some history of borrowing and then paying people back, because that's what you're being judged on. And believe me, you are being judged by this. So, been judging your credit worthiness. So make sure that you establish some kind of credit. And when I say establish credit, I don't mean by, going someplace that doesn't report to the credit bureaus. There are 3 major credit bureaus: TransUnion, Equifax, and Experian. They've got to report to the credit bureau for you to get the quote-unquote credit for that particular account. And it's best if they report to all 3. It's absolutely best if they report to all 3. So another negative is repos. So if you have had a repossession on, your vehicle, then that's an issue for you. That's absolutely a negative. It's very, very difficult to get those removed and changed unless they really made an error when it comes to your repossession. Some people turn their car in early. Your credit report will say voluntary repossession. If you don't turn it in early and the tow truck man had to come in the middle of the night and snatch it from you, then it'll say involuntary repossession. So, of course, that's a negative for you. Bankruptcies. Absolutely. You know that bankruptcy is going to be a negative for you. It's going to stay on your credit report for 10 years. So for 10 years, it'll be on your credit report. If you file bankruptcy, doesn't matter which chapter it is, 7, 11, 13, it'll stay on your credit report for 10 years if you file a bankruptcy. Now, that does not mean that you can't establish and get credit after your bankruptcy has been litigated, but it's be a little tougher at the beginning. And the further away you get from the bankruptcy, so now say you're 5 or you're 7 years out from your bankruptcy, the less impact it's going to have on your score, and eventually it'll come off. Here's one thing I warn you about on your credit reports for your bankruptcy. If you filed bankruptcy, oftentimes some of the accounts that you did file bankruptcy on are stuck in the regular part where you can see them still, and they may be included in the total amount for your bankruptcy, but they went to collections or they're sitting there, something of that nature. Make sure that the credit bureaus are aware that this particular account was included in the bankruptcy. It may be removed from that part of your credit report. That would be a positive for you. Anytime you can get something negative removed off of your credit report, that'll definitely be a positive for you. And since actually just popped in my head, I want to make sure that you guys know that if you have had an old credit card, and let's say you paid it off or what have you, and you even closed it, or you didn't close it, and you paid it off, don't have the credit bureaus remove those from your credit report. And you can, of course, you can request anything. And let's say they absolutely remove it from your report for you, because if you contact the credit bureau and you had this old credit card, and now the credit bureau asks the credit card company, hey, is this person's account correct or whatever, they often may not even respond at all. They get 30 days. If you mail it in, they get 35 days, and the credit card company may not respond at all, and then it'll come off your credit report. That's not necessarily a positive for you at all. If it was a really, really bad account, you were always 30 days late, then maybe it'll be a positive for you. But if you had an old account, don't get those things removed. It is good for your credit worthiness. When that mortgage underwriter is looking at your credit report, they want to see that you've had accounts for a long time. So keep those things on your credit report. All right, so let's jump to some positive. Let's jump to some positive things. So positive things that affect your credit report, of course, is paying on time. That's the number one thing. 35% of your score is made up off of how well you pay. So pay on time. Another item that will help you, if you have credit cards and you have high limits, or if you just got a regular limit and say it's $500, but your balances are low. You've got to keep your balances low. 30% of your score is based off of this particular factor, and you want to keep your balances to 30% or lower of whatever the limit is. So when you get a new credit card, we talked about people that are establishing credit, and you're 18 and you're just getting to college or what have you, and you're establishing credit. When you get a new credit card and they give you that $500 or they give you that $1,000 limit, don't go charging $989 on the $1,000 limit. That's not what you want to do. The best thing for your credit score is to charge less than $300 for your credit score. That's the best thing to do. 30% of whatever that balance is where you want to be. Okay, I actually just mentioned having old accounts. So if you got old accounts, let them stay on there. The people with the best credit scores have had credit for 20, 30 years. They may have very, very old accounts still on their credit reports. Let them stay there. So the longer that you have had credit, the better. Doesn't mean that if you are a younger person, you can't have good credit or a very good credit score, but it's best to, have those old accounts on your credit report and let them stay there. Your mix. Your mix is the revolving and installment loans that you have on your credit report. That is very good to have a mix of things. So for some reason, the credit bureaus think that if you only have credit cards, then you may not be such a great steward over your credit. For whatever reason, even though you've always paid them on time and upfront, they think that you may not have the best when it comes to your credit worthiness. So you want to have a mix of revolving as well as installments. So examples, of course, of revolving would be your credit cards. If you have a home equity loan, then that is an example of revolving as well. Your installments would be like mortgages, your car notes, student loans, personal loans. And when I say personal loans, I'm not talking about you went and borrowed some money from a relative or a friend. I'm talking about from a lending institution. So if you went and got a personal loan from, a bank or one of the institutions, a credit union that loan money out to you, that is a personal loan, and it has a term to it. So you pay it back over 24 months, and you have, you pay $100 a month or whatever it is, then that is an installment loan. And so you want a mix of both of those things. The people with the absolute best scores, have had a long history, talking like 20, 30 years. Again, that does not mean if you're 21 that you can't have a good credit score. This week, I spoke to a gentleman named Carlos. Carlos has a 720. Carlos is 21 years old. So he needs to keep up what he's doing and keep adding to his credit score. Just because you're a younger person does not mean that you can't have a good credit score because you don't have that 20, 30 years of experience. But you definitely need to make sure that you keep those things on your credit report. People with the best scores, again, have 4 to 6 credit cards. Now, that does not mean that you need to have 4 to 6 credit cards yourself. You don't have to, but people with the best scores have that long history and they have 4 to 6 credit cards. That also doesn't mean that they hold a balance on all of them. I don't even know how many